Hey there, this is Ryan Skaggs and the Mortgage Minute. Thank you so much for tuning in. This channel is dedicated to everything real estate, mortgage, and interest rates. And we are going to talk about where interest rates are going. And we saw the largest 1 week increase in rates the entire year over this past week. More about that next. All right, so let's talk about those interest rates. We are at 3.0. One on the average 30-year fix, according to Freddie Mac. I'm going to take you onto the screen here, and I've got a blown up picture of the last few weeks, right? So I'll actually even go even further here, so we can kind of take a peek, and we see this trend right here, this big 1 week increase. That was a 13 basis points. We went from 2.88 to 3.01 week to week. That was the largest increase in the last year. That's right. So why did we see that increase? Why did we see that kind of trend going up over the week, and what is going on, right? So we're going to talk about that. First of which is the Fed came out last Wednesday and had their meeting minutes and some information about the economy, inflation specifically. And that's really where I'm going to hone in on, is that inside of the Fed minutes, they talked about inflation being around 2%. There's been a lot of information after that, and I'm going to actually link to a video and then put a couple links below to a great video really talking granular in detail about some of the kind of cherry picking the numbers of, how the Fed's looking at inflation. But long story short, as inflation rises, typically interest rates are going to follow. And the reason being is that this occurs because lenders, right, that is the end investor, or the lenders that are actually putting out all that money, right? We're originating the loan, but they're putting out all that money, are going to demand a higher interest rate as compensation for the decrease of what they can do with that dollar in the future. If my $1 buys me a gallon of milk today, but inflation now, the gallon of milk is $1.20. I can't buy as much. I can't buy that same gallon of milk, right? I know milk's not $1, even though I don't do grocery shopping. That's all my wife. But with that said, I can't buy that same thing. So if I know that when I go to the store, it's going to be more expensive, I'm going to demand more now to be able to purchase that same thing that I have in the future, right? Especially with fixed costs and originating these loans, is that they're demanding a higher rate. So you're going to potentially see those interest rates rise as we watch inflation rise. So I'll link to a couple things below, but that's really the kind of overall hypothesis that we're seeing as the economy grows. We're putting more money into it, and now we start to see inflation. Things are going to cost more money because the money supply is larger. So that will likely see those rates rise. And again, week over week, the largest 1 week increase in interest rates, 0.13, that we've seen in 2021 and over the past 1 year period. So now the last thing we're going to talk about is, where is our trend going? We're now going into the fourth quarter of 2021. What does that look like? Where are we going from here? The crystal ball is awfully murky right now. I'm not going to lie to you. With that said, I believe, and this is my personal opinion, that we're going to see rates maybe dip down just a little bit, a couple more times, but we are starting that trend of higher interest rates. I did a video before, and I'll link to it up there, talking about, the cost of refinance. And the reason being is that this might be the last chance for a lot of people that had a decent interest rate before to have an opportunity to potentially look at a refinance. So hit me up in the comments below. Let me know what your questions are, where you think rates might be going. Hit that like button, hit that subscribe. I would be forever grateful. This is Ryan Skaggs, the Mortgage Minute. Thank you so much for tuning in, and we'll see each other again very, very soon.